Welcome to ACCA Academy YouTube channel. In this lecture, I want to solve question on published accounts. IAS 1, presentation of financial statements. Using question from ICAN May 2023 financial reporting question number 1. If you are coming across my lecture for the first time, please don't forget to like the video, share it with others, and subscribe so that you don't miss my upcoming videos. To my returning subscriber, I say thank you for being part of this channel. Example. The following trial balance was extracted from the books of Adamas PLC at June 30, 2022. Amount in 1,000 naira. Freehold land and building at valuation at 1st of July 2021, 1,065,600. Office equipment 65,800. Delivery van 301,400. Accumulated depreciation at 1st of July 2021. We have office equipment 199,800. Delivery van 120,560. Ordinary share capital of 50 kobo each, fully paid, 790,000 naira. Bank balances. We have debit balance of 142,310 and credit balance of 49,950. And this credit balance is overdraft. Overdraft should be recognized as current liability, and this is current asset. Investment income, 65,246. Financial assets, 244,200. Delivery dividend paid 199,880. Cost of sales 995,003. Distribution cost 161,128. Gains on translation of foreign operations 47,108. Trade receivables / payables 579,065 for trade receivables and 353,846 for trade payables. Revenue 2,142,819. Intangibles 50,600. Administrative expenses 173,727. Then we have interest on loan notes 14,763. General reserve 109,809. Deferred tax at 1st of July 2021 we have 100,078. Inventories at 30th of June 2022, we have 622,812. Then retained earnings, 231,572. 3% redeemable loan notes, 843,000. Revaluation reserve of freehold land and building, 80,500. Share premium, 142,000. Suspense account, 60,000. The total is 5,336,288 for both the debit and the credit side. Then we have additional information. 1. The value of the freehold land and building includes a land element of 266,800,000 naira. And the estimated remaining life of the building at July 1st, 2021 was 25 years. Depreciation on building is charged 65% to cost of sales and 35% to administrative expenses. Note 2. The revenue includes 69,250,000 naira for an item of office equipment disposed on November 30, 2021. The equipment had a carrying value of 46,060,000 naira at the date of sale. The equipment cost 75 million naira when it was acquired 3 years ago. Note 3. Included in the cost of sales is 82.6 million naira incurred in the manufacture of a new office equipment, which was put to use by Adamas PLC on February 1st, 2022. Note 4. All office equipment is depreciated at 15% per annum using reducing balance method and charged to cost of sales, while depreciation of all motor vehicles is at 20% per annum on straight line basis and charged to distribution cost. Depreciation is to be charged in full in the year of acquisition and no charge in the year of disposal. Note 5. Following the conclusion of a winding up proceedings on one of Adamas PLC customers, it was resolved to write off the sum of 26,450,000 naira due from the customer and to make allowance for doubtful receivables of 2.5% on the continued trade receivables. Note 6. The financial assets are equity instruments held at fair value through profit or loss and have suffered impairment loss of 12.7 million naira at the year end. Note 7. The 3% redeemable loan notes was issued on October 1st, 2021 under terms that provided for a large premium on redemption in 2025. These terms were interpreted by the finance director to mean that the loan notes have effective interest rate of 6.5% per annum. Note 8. The income tax expense for the year ended June 30, 2022 is estimated at 143,552,000 naira, while the deferred tax payable for the same period amounted to 12,520,000 naira. There was an over-provision of 25,664,000 naira in respect of income tax for the previous trading year. Note 9. The suspense account balance represents the corresponding credit entry for shares issued at a premium of 15 kobo per share, arising on issue of 400,000 ordinary shares made during the year. Note 10. The directors recommended a 20 kobo final dividend per ordinary share for the year and to transfer 38.9 million to the general reserve required. Prepare for Adamas PLC the following financial statements. 1. Statement of profit or loss and other comprehensive income for the year ended June 30, 2022. 2. Statement of changes in equity for the same period. 3. Statement of financial position as at June 30, 2022. The name of the entity is Adamas PLC Solution. The name of the entity is Adama PLC. So we want to prepare statement of profit or loss. Statement of profit or loss and other comprehensive income for the year ended 30th of June 2022. Amount in 1,000 naira. Now let me have notes. The first item should be our revenue. So we have revenue. Let's have note 1. Then our note 1. So we have revenue. Balance brought forward. That is the revenue as per the trial balance. We have revenue 2,142,819. 2,142,819. Then we go through the additional information. Do we have any unusual item included in revenue? Note 2. The revenue includes 69,250,000 naira for an item of office equipment disposed on November 30, 2021. An equipment was disposed of, and the proceeds from disposal is included in revenue. That means an error of principle have been committed. So this transaction is recorded in a wrong class of accounts. So we are going to remove proceeds from disposal of office equipment from revenue. Yeah. Now we have proceeds from disposal of office equipment, and that amounted to 69,250,000. So if you subtract that from revenue, so the net amount will be 2,142,819 minus 69,250. Then you are left with 2,073,569. That should be recognized as revenue. 2,073,569. After revenue, the next item should be our cost of sales. Let's have that as note 2. Cost of sales. Now, let's go through the trial balance. So, working 2, which is cost of sales. Then, from our trial balance, we have cost of sales, 995003. The inventory you are given in trial balance, the inventory at 30th of June 2022, which is the end of the reporting, end of the accounting period. That is to show that this inventory is our closing inventory. So this one is deferred tax. This is our closing inventory. So since you have been given the cost of sales in our trial balance, that means that inventory will not require any adjustment unless it has been recorded wrongly. So our cost of sales, 995003. Cost of sales, 995003. We did not need opening inventory, purchases, less closing inventory, since cost of sales has been given in trial balance. That cost of sales, those items will have been used in calculating the cost of sales figure given in the trial balance. So now let's go through the additional information in order to ascertain if there are any items that have not been correctly included in our cost of sales. Note 1. The value of freehold land and building includes a land element of 266.8 million naira, and the estimated remaining life of the building at July 1st, 2021 was 25 years. Depreciation on building is charged 65% to cost of sales and 35% to administrative expenses. So we want to calculate depreciation on building now. Depreciation, and you have to charge 65% of that depreciation to cost of sales. Now, depreciation building. Back to the same note. You were told the value of the freehold land and building includes land element of 266.8 million. Remember, we don't use to depreciate land. So you have to exclude the value of the land from the value of the entire property. How much is the value of the freehold land and building? We have freehold land and building at valuation 1,065,600. 1,065,000. 1,065,600. So you remove the land element from note 1, and you were told it's 266.8 million. So there are 3 zeros. 3 zeros. Let me put K to indicate thousand. So that means additional 3 zeros needs to be added. And you were told from that same note that the remaining life of the building at July 1st, 2021. July 1st, 2021 is the beginning of the accounting period. You are preparing financial statement for June 30, 2022. That means the accounting period span from July 1st, 2021 to 30th of June 2022, which is 1 year. And the remaining life of the building as at the beginning of the period, of the reporting period, is 25 years. So remember, 65% will be charged to cost of sales. So now divided by 25. Divided by 25. This will give you the depreciation for the whole year. Depreciation for the whole year. Then remember, 65% of that depreciation will be charged to cost of sales. Now, let's remove the land from the value of the property. 1,065,600 minus 266,800. That gives us 798,800 divided by 25. Then the annual depreciation is 31,952. Then 65% will go to cost of sales times 65%. So you have 20,769. 20,769. That is the depreciation that will be charged to cost of sales. Then we've done with note 1. Note 2. The revenue includes 69,250,000 for an item of an office equipment disposed on November 30, 2022. So the equipment had a carrying value of this. This is the carrying value, and it was sold. The proceed is greater than the carrying value. That means this equipment has been sold at a profit. So we are going to include the profit from disposal on other income. The equipment cost this. This relates to disposal. Note 3. Included in the cost of sale is 82.6 million incurred in the manufacture of a new office equipment, which was put to use by Adama PLC on February 1st, 2022. This value is the cost incurred in manufacturing a new office equipment. This cost ought to have been capitalized. That is, it ought to have been recorded at the value of equipment. It ought to have been included in the office equipment. And you were told it was included in cost of sales. That is a wrong classification. So we are going to reclassify it from cost of sales to office equipment. So in that case, you will need to remove this from cost of sales. So capitalized office equipment. Capitalized office equipment. And that amounted to 82.6 million. You are going to remove it from cost of sales. Then you add it to office equipment. Then all office equipment is depreciated at 15% per annum using reducing balance method and charged to cost of sales. While depreciation of all motor vehicle is at 20% per annum on straight line basis and charged to distribution cost. And remember, you were to charge depreciation on office equipment. You are to charge it to cost of sales. And that depreciation is to be calculated on reducing balance method. Now, let's calculate depreciation on office equipment. Now, depreciation on office equipment. So, and you were to use reducing balance method. You have the cost. How much was the cost of the entire office equipment? You have the old office equipment. You have 865,800. 865,800. 865,800. And you were told equipment worth of 75 million was disposed. You have 75 million. The one disposed, you have to remove that. So we have 865,800 minus 75,000. Then you have 790,800. Since depreciation is to be calculated using reducing balance, you were told to calculate depreciation on office equipment using reducing balance method. So under reducing balance method, depreciation is calculated on the carrying amount of the asset. So carrying amount is cost less accumulated depreciation. How much is we have calculated cost less the disposal. Then how much is the accumulated depreciation in respect of the equipment of the entire equipment? So now let's have accumulated depreciation. So we have balance brought forward. How much is the depreciation in the trial balance? So we have depreciation. Okay. Office equipment, 199,800. 199,800. That is the depreciation. 199,800. Then you also have depreciation associated with the equipment disposal. How much is the depreciation that relates to the equipment disposed? Remember, the revenue includes 69,250 million for an item of office equipment disposed on November 30, 2021. This is the proceed. The equipment had a carrying value of 46,060,000. This is the carrying amount. At the date of sale, the equipment cost 75 million. It is this 75 million I subtracted from the cost. Then, if the cost is 75 million and the carrying amount is 46,060,000, the difference between the 75 million and 46,060,000 represent the accumulated depreciation associated with the equipment disposed. So let's have 75 million. 75 million minus 75 million minus 46,060,000. That will give you the depreciation associated with the equipment disposed. So you have the depreciation to be 28,940,000. If you subtract that from the total accumulated depreciation minus 199,800, then you have 170,860. This is the depreciation on the remaining equipment. So if this cost is A and this is B, then to get the carrying amount, it will be A minus B. So now, to calculate depreciation for the year now, depreciation for the year. Remember, you were to depreciate equipment by 15%. 15% of 790,800, that is A, minus 170,860, minus 170,860. So if you calculate 15% of the difference, so now let's subtract 790,800. You have the difference of 619,940. Then what is the depreciation at the rate of 15%? You have 92,991. Then back to 3. Included in the cost of sale is 82.6 million incurred in manufacture of a new office equipment, which was put to use by Adama PSC on February 1st, 2022. This new equipment was put into use as of February 1st, 2022. And your accounting year end is June 30, 2022. Now, let's count from February 1st. February, March, April, May, June. 5 months. You were told that depreciation is to be charged in full in the year of acquisition and no charge in the year of disposal. So depreciation on office equipment will be calculated in full. You don't need to apply time apportionment. You don't need to apply 5/12. Since depreciation is to be charged in full in the year of acquisition. Now, on the new equipment, you have depreciation. Depreciation on new equipment. New equipment from note 3. 15% of 82.6 million. So 15% of that. So that gives us 12 million 390,000. If you add it to this, plus 92,991,000, so you have 105,381. So that is the depreciation that will be charged. Depreciation on office equipment. So you are going to charge 105,381. Then back to the note. We have note 5. Following the conclusion of winding up proceedings on one of Adamas PLC customers, it was resolved to write off the sum of 26,450,000 due from the customers and to make allowance for doubtful receivables. This does not affect cost of sales. Financial assets, that does not affect cost of sales. Redeemable preference shares doesn't affect cost of sales. Income tax does not affect cost of sales. Then the suspense account does not affect our cost of sales. So note 10 does not affect cost of sales. Now let's sum up this. What is the total? So we have 105,381. Let's subtract it to 2.6 million minus 82.6 million plus 20,769 plus 995,003. Our cost of sales is totaled 1,038,553. 1,038,553. If you subtract cost of sales, then you arrive at the gross profit. 2,073,569 minus cost of sales. There you have the gross profit of 1,035,016. That is gross profit. After gross profit, the next item is distribution cost. Let's have our distribution cost. Distribution cost. Note 3 and note 3, distribution cost. Distribution cost. We have 161,128. Balance brought forward. That is amount as per the trial balance. We have 161,128. Let's go through the note. In note 1, depreciation is to be shared between cost of sales and administrative expenses. It doesn't affect distribution cost. Note 2, that is disposal. We have depreciation of all motor vehicles is at 20% per annum on straight line basis and charged to distribution cost. Now let's have depreciation of motor vehicle. Depreciation on motor vehicles, and you have to depreciate it on straight line, 20%. Now, under straight line method, depreciation is calculated on the cost. How much is the cost of the motor vehicle? We have delivery van, 301,400. 301,400. So 20% of that. So we have 60,280. 60,280. Following the conclusion of a winding up proceedings on one of Adamas PLC customers, it was resolved to write off the sum of 26,450,000 due from the customers. Now, bad debt written off, 26,450,000. Now, bad debts written off 26,450,000. Then let's continue with that same note. And to make allowance for doubtful receivables of 2.5%. 2.5% is the same as 2.5. 1 divided by 2 is 0.5, which is 2.5 on the continued trade receivables. Now let's have allowances for doubtful debts. Allowances for doubtful debts, which is 2.5% for continuing receivable. Let me show it here. 2.5%, which is 2.5. We have trade receivables. 579065. 579065. You subtract your bad debts written off for 26,450,000. If this amount of bad debts written off, if it is in the trial balance, you won't need to subtract it. That means it will have been subtracted before from the trade receivable, before arriving at the receivable balance in the trial balance. But since you have it in the additional information, it has not been subtracted. So that is why you will need to subtract it in order to arrive at the receivable that are good. So now, let's subtract this. 579065 minus 26,450. So you have 552615. Calculate 2.5% of that. Then you have 13,815. 13,815. There are no further adjustments that will affect the distribution cost. So let's sum it up. 161,128 plus 60,280 plus 26,450 plus 13,815. Our distribution cost is totaled 261,673. So 261,673. After distribution cost, we have administrative expenses. Administrative expenses. Let's have that as note 4. Administrative expenses. So we start with the balance as per the trial balance brought forward. Now let's go through our trial balance. How much is our administrative expenses? Administrative expenses, we have 173,727. 173,727. 173,727. Now let's go through the notes. In note 1, we were told the value of the freehold land and building includes a land element of 266,800,000, and the estimated realizable remaining life of the building at July 1st, 2021 was 25 years. Depreciation of building is charged 65% to cost of sales and 35% to administrative expenses. Now, let's calculate the amount of depreciation. Depreciation on building. We have to charge 35% to administrative expenses. And how much is the value of the land and building? You were told freehold land and building at valuation 1,065,600. 1,065,600. It includes land element. How much is the value of the land? 266.8 million. 266,800. And the estimated remaining life is 25 years divided by 25. So how much will be the value of the depreciation? 1,065,600 minus 266,800 divided by 25. Then you calculate 35% of what you have. The depreciation amounted to 11,183. 11,183. So you sum it up. 11,183 plus 173, 727. 173, 727. So we have 184,910. So our administrative expenses is 184,910. After administrative expenses, no cease. The financial assets are equity instruments held as fair value through profit or loss. I have suffered impairment loss of 12.7 million at the year end. Now let's have the impairment loss. Impairment of financial assets held at fair value through profit or loss. That impairment loss is 12.7 million. After subtracting this, so you arrive at the operating profit, 1,035,016 minus 261,673 minus 184,910 minus 12.7 million. You have 575,733. This is our operating profit, or profit from operation. Profit from operation. After this, you have other income. Other income. Let's have that as note 5. Investment income, 65,246. Note 5. Other income, which include investment income, of 65,246. 65,246. Now let's go through the note. Note 2. The revenue includes 69,250,000 naira for an item of office equipment disposed on November 30, 2021. The equipment had a carrying value of 46,060,000. So the carrying amount is 46,060,000, and it was sold for 69,250,000. The difference between the carrying amount and the proceeds, that represent the profit from disposal of equipment. Now, profit from disposal of equipment. The carrying amount is 69,250,000, and the proceed is 46,060,000. 46,060,000. The difference between the two amounts, 69,250 minus 46,060. The difference is 23,190,000. If you add it to the investment income of 65,246,000, then you have 88,436. 88,436. That is other income. After other income, we have finance cost. I've told you that finance cost are the interest-related items. Finance cost. They have that as note 6. Note 7. The 3% redeemable loan notes was issued on October 1st, 2022, under the terms that provides for a large premium on redemption in 2025. It was issued on October 1st, 2022. If you count from October 1st, 2022 to June 30, which is October 1st, 2021 to June 30, 2022. So you have October, November, December, January, February, March, April, May, June. That is 9 months. So the period is 9 months. These terms were interpreted by the finance director to mean that the loan notes have effective interest rate of 6.5% per annum. So the interest to be recognized as an expense must be calculated at the effective interest rate. So that means your finance cost, one calculated at effective interest rate. Effective interest rate of 6.5% of the loan notes. Now, the 3% redeemable loan notes given the trial balance amounted to 843,000 times 843,000 for 9 months out of 12 months in a year. So 6.5 is the same as 6.5 divided by 100 times 843,000. Then you have 54,795 times 9 divided by 12. So you have 41,096. 41,096. The interest given in the trial balance is the amount paid for the period. So that is not the amount that will be recognized in accordance with IAS 32, financial instruments presentation. So we have finance cost to be 41,096. Profit before tax 575,733 plus 88,436 minus 41,096. So we have 623,073. That is our profit before tax. Profit before tax. After the profit before tax, the next item will be income tax expense. Income tax expense. They have that as note 7. We have income tax expense. To calculate the amount of income tax expense for the year, you start with provision for income tax for the year. And how much is that? Back, go to note 8. You have the income tax expense for the year ended June 30, 2022 is estimated at 143,552,000 naira, while the deferred tax payable for the same period amounted to 12,520,000. So the income tax for the year is 143,552,000. Then that same note, you have there was an over provision of 25,664,000 in respect of income tax for the previous trading year. So you are going to subtract over provision for prior year income tax, which is 25,664,000. Then in our notes 8, you have the deferred tax, while the deferred tax payable for the same period amounted to 12,520,000. This is the amount of the deferred tax at the year end. You compare, you check if you have any deferred tax in the trial balance in order to ascertain whether there is an increase in deferred tax or a decrease. The year end is 12,520,000. How much do you have in trial balance? The deferred tax in trial balance is 100,078,000. I remember the one in the footnote, the additional information is 12,520,000. So the one in the trial balance is greater. That means the year end is lower. So we have decrease in deferred tax. Decrease in deferred tax. The opening balance is 100,078,000, while the closing balance is 12,520,000. We subtract the decrease. If it is an increase in deferred tax will be added. 100,078,000 minus 12,520,000. So you have 87,558,000. After this adjustment, how much is the tax expense? 143,552 minus 25,664 minus 87,558. So we have 30,330,000. That is the amount of tax that will be expensed for the period. 30,330,000. After subtracting that, so we have, let's subtract that, minus 623 and 73. So we have 623 and 73. We have 592,743. That is the profit for the year. Profit for the year. There are no items of other comprehensive income that occur during the year. Since the revaluation reserve we have, it has been existent in the prior accounting period. The gain on translation of foreign operations, all those ones have been existent in the prior year. They are not just occurring during the period. So this is where we are going to end the statement of profit or loss. Then in the requirement B, you have to prepare the statement of changes in equity. Now let's have Adamas PLC statement of changes in equity for the year ended June 30, 2022. So statement of changes in equity. How many components of equity do we have in this question? Now, let's go through our trial balance. We have revaluation reserves, that is 1. We have share premium, that is 2. 2. Ordinary shares, 3. Then gain on translation of foreign operation, 4. General reserves, 5. Retained earnings, 6. So we have 6 items. 1, 2, 3, 4, 5, 6. We have ordinary shares. We have share premium. We have retained earnings. We have general reserves. We have foreign exchange reserve, foreign exchange reserve. The sixth item, so we have written general reserve, revaluation reserve, revaluation reserves. So these are the components of equity we have in the question. So all amount in 1,000. Then you start with the opening balance. The opening balance. So we have share premium 142,000. Revaluation reserve 80,500. Balance brought forward, that is the opening balance. Revaluation reserve is 80,500. Then we have share premium of 142,000. 142,000. Then we have ordinary shares of 50 kobo each, fully paid, 790,000. Ordinary share of 790,000. Then we also have gains on translation of foreign operation, 47,108. Foreign exchange reserve, 47,108. Then we also have general reserve, 109,809. General reserve, 109,809. Then we also have retained earnings, 231,572. 231,572. Then we have profit for the year. The one obtained from the statement of profit or loss. Profit for the year. The profit for the year obtained from the statement of profit or loss is 592,743. 592,743. 743. Then we also have dividend paid. Dividend paid, 119,880. Dividend paid. Dividend paid. 119,880. 119,880. Dividend will be paid out of the retained earnings. That is why we put that amount under the retained earnings column. Let's go through the footnote. This note 1 is about the depreciation of freehold land and building. Then note 2 is about disposal. Note 3 is about the new plant and equipment manufactured, new office equipment manufactured. Note 4 is about depreciation of office equipment. None of them have affect the statement of changes in equity. But if you look at the trial balance here, you have suspense, 60,000. We have a note on that. Note 9, the suspense account balance represents the corresponding credit entry for shares issued at a premium of 15 kobo per share, arising on issue of 400,000 ordinary shares made during the year. There are issue of ordinary shares of 400,000. There are issue of 400,000 ordinary shares during the year at a premium of 15 kobo. Remember, the par value of the company's equity share or ordinary shares is 50 kobo. So the par value now will be credited to ordinary share. So our ordinary share will be 50 kobo times 400,000. Then we have 200,000. Then the share premium now. Share premium, the premium of 15 kobo based on note 9, which is 15 kobo of 400,000. 15 kobo times 400,000. That gives us 60,000. So you were told that 60,000, you were told that the suspense account balance represent corresponding credit entry for share issued at a premium of 15 kobo per share. And if you go through the trial balance, the amount you see at the credit side written as suspense account is 60,000. That means that 60,000 is the share premium, the premium they have during the period. Issue of shares. Issue of shares. Issue of shares. The premium of 60,000. So which have not been recorded during the period. But your ordinary shares of 200,000 has been recorded. That means this should not be 790,000. So the ordinary shares of 200,000 is the issue of shares during the period. Ordinarily, this will be 590,000 if you remove it without that 200,000. Note 10. The directors recommended a 20 kobo final dividend per ordinary shares for the year end. For the year. So dividend, this is dividend proposed. In accordance with IAS 32 financial instrument, dividend proposed does not meet the recognition criteria as liability. So this should be ignored. Can only be disclosed by the way of note for the year. And to transfer 38.9 million to general reserve. You are transfer to general reserve. Transfer to general reserves. If you are making a transfer to general reserve, 38.9 million, that means it is coming into general reserves, 38.9 million, and it is going out of retained earnings, 38.9 million. It is negative under retained earnings, and it is positive under general reserves. So now let's total this. So this is 790,000. This is 202,000. Then for the retained earnings column, we have 231,572, 231,572 plus 592,743, 592,743 minus 119,880 minus 38,900. So you have 665,535. 535. That is retained earnings. Then general reserves 109,809 plus 38,900. Then you have 148,709. Then this is still 47,108. And this still remains as 80,500. 80,500. So that is all about statement of changes in equity. For the purpose of statement of financial position, let's prepare the schedule of property, plant, and equipment, or movement in property, plant, and equipment. So the property, plant, and equipment comprises freehold land and building. That is number 1. Office equipment 2. Delivery van 3. So we have 3. Now let's have schedule of property, plant, and equipment. 1, 2, 3, 4. We have freehold, land and building. Freehold, land and building. Then we also have office equipment. We as well have delivery van. Then we have total. All amount in 1,000 naira. So we start with the opening balance, which will be written as balance brought forward, that is at cost or valuation. Now let's go through the trial balance. We have freehold land and building and valuation, 1,065,600. Office equipment, 865,800. Delivery van, 301,400. Let's write them down. Land and building, 1,065,600. Then office equipment, 865,800. Then delivery van, 301,400. Now, what will be the total? 1,065,600 plus 865,800 plus 301,400. And that is totaled 2,232,800. Now, let's go through the additional information. Note 1. The value of freehold land and building includes a land element of 266.8 million naira. So we have written land and building. So together, since it is written together, so this will not be useful. But if you want to separate land in our schedule of property, plant and equipment, that means this will be written as land and then subtract it from land and building and have building written separately. So we don't need this for now. 2. The revenue includes 69,250,000 for item of office equipment disposed on November 30, 2021. The equipment had a carrying value of 46,060,000 at the date of sale. This is the carrying value of the equipment. The equipment cost 75 million when it was acquired 3 years ago. This is a disposal. There is a disposal of office equipment during the year. So now, let's write that as disposal. Disposal, office equipment. The cost of the office equipment is what we are going to use, which is 75 million naira. So when equipment is disposed, equipment will reduce. So that is why this will be subtracted. 75 million naira. Back to the note. Note 3. Included in the cost of sale is 82.6 million incurred in the manufacture of a new office equipment, which was put to use by Adamant PSC on February 1st, 2022. So there is a new office equipment manufactured. So we are going to write this as an addition to office equipment. So addition, since it is a capital expenditure, 82.6 million. Office equipment, 82.6 million. 82.6 million. Then back to the note. Note 4. All office equipment is depreciated at 15% per annum using reducing balance method and charged to cost of sale, while the depreciation of all motor vehicle is at 20% per annum on straight line basis and charged to distribution cost. So these are what we are going to include in our movement in property, plant and equipment before depreciation. Now let's total it.
So this will be 1,065,600. So office equipment, 865,800 minus 75,000 plus 82.6, that is total 873,400. 873,400. Then delivery van, we have 301,400. Then the total 2,232,800 minus 75,000 plus 82,600. We have 2,240,400. Then we have depreciation. Under the depreciation, you start with the opening balance. Balance brought forward. The accumulated depreciation as per the trial balance. We have office equipment. Accumulated depreciation at 1st of July 2021. Office equipment 199,800. Delivery van 120,560. We are not given depreciation on building. The accumulated depreciation on building was not provided, so we have dash. Office equipment, we have 199,800. Then we have delivery van 120,560. So now, if you total that, 199,800 plus 120,560. So we have 320,360. That is the total. 320,360. The next item will be the depreciation charge for the year. Charge for the year. Depreciation charge for the year as an expense in the profit or loss. Depreciation charge on building was apportioned between cost of sales and administrative expenses. 20,769 was charged to cost of sales. 20,769, which was charged to cost of sales, plus depreciation on building. The one charged as an administrative expenses is 11,183 plus 11,183. So depreciation on building charge for the year is 31,952. Then for depreciation on office equipment, and we have 105,381. 105, 105,381. That is the depreciation charge for the year on office equipment. Then we also have on motor vehicle. Depreciation of motor vehicle is 60,280. 60,280. Now let's sum it up. 31,952 plus 105,381 plus 60,280. And that is totaled 197,613. In note 2, you were told revenue includes 69,250,000 for an item of your office equipment disposed on November 31st, November 30, 2021. The equipment had a carrying value of 46,060,000. At the date of sale, the equipment cost 75 million. The difference between the cost of the equipment and the carrying value of the equipment represents the accumulated depreciation on office equipment disposed. So we are going to have disposal 75 million minus 46,060,000. So the difference is 28,940,000. Accumulated depreciation in respect of office equipment disposed is 28,940,000. The difference between 75 million and 46,060,000. So we have disposal. The difference between 75 million and 46,060,000. So we have 28,940,000. 28,940,000. So the total will be, how much is the total of the accumulated depreciation? So this is 31,952. Then 199,800 plus 105,381 minus 28,940. And that is totaled 27,276,241. 276,241. Then for delivery van, 120,560 plus 60,280. That is total 180,840. For the total column, we have 320,360 plus 197,613 plus minus 28,940. So that is total 489,033. 489,033. This is accumulated depreciation as at the end of the year, which is 30th of June 2022. Let me call this one B. And this is the total of the cost. To get the carrying amount as at 30th of June 2022. It will be your A minus B. So for the total column, 489 and 33, subtracted from 2,240,400. 2,240,400. So we have carry amount to be 1,751,367. 1,751,367. For delivery van, 301,400 minus 180,840, and that is totaled 120,560. Then we have for office equipment, A73,400 minus 276,241. We have 597,597 97159. Then for freehold land and building, 1,065,600 minus 31,952. So we have 1,033,000. 1,033,648. Adama PLC statement of financial position as at 30th of June 2022. So the first item, we have our assets. The first asset to consider will be our non-current assets. The first non-current asset we have include property, plant, and equipment. So that will be note from our workings. We have 1,751,367. 1,751,367. That is our property, plant, and equipment. Note I think that should be note 6, if I'm not mistaken. I've brought up the profit or loss. So if the last note in what profit or loss is 5, that means this will be 6. So after property, plant, and equipment, go through the balance. Non-current assets. We have financial assets, 244,200. Financial assets, 244,200 minus impairment. Impairment, we are given the impairment loss of financial assets. So we are given the impairment loss of 12.7 million. So we are going to subtract that 12.7 million impairment loss, 12.7 million. 244.2 million minus 4.7 million, 12.7 million. So we have 231,500. We also have intangibles, intangible assets. Intangibles, 50,600. 50,600. There are no other non-current assets. So we can total that. What is our total non-current asset? 231,500 plus 50,600 plus 1,751,367. Then we have 2,033,467. 2,033,467. Then after this, we have current assets. Current assets. Our current assets include inventories. Inventories. So back to the trial balance. Inventories. We have inventories of 622,812. 622,812. After inventory, we have trade receivables. Trade receivables. And that is given to be 5,790,65. 5,790,65. That is our trade receivable. 5,790,65. 065. We were given some information in the notes, which include bad debts written off of 26,450,000, and that is given in note 5. 26,450,000. Then we equally calculated the allowance for trade receivables, 4.5% on the continuing trade receivables, which have been calculated earlier. So the two will be deducted from our trade receivables, minus 26,450,000 and minus 30,815, minus 26,450 minus 13,815. So our good receivables will be 579,065 minus 26,450 minus 13,815. So we have 538,800. 538,800. We have bank balances 142,310. Bank balance, bank balance 142,310. 142,310. Then there are no other items that will be treated as part of our current assets, so you can sum it up. 812, which is our inventory. Sorry, 622,812. That is our inventory. So 622,812 plus 538,800 plus 142,310. Then we have 1,303,922. Let me reconfirm my casting. 622,812 plus 538,800 plus 142,310. 1,303,922 plus our total non-current assets, which is 2,033,467. So if you add the non-current asset and current assets, so we have total assets. Our total assets is 3,337,389. So that is our total assets. After total assets, we have equity and liabilities. So you are going to start with the equity items. The first item to consider is ordinary share. Ordinary share. From our statement of changes in equity. So we have that to be 790,000. 790,000. 790,000. After ordinary share, we have share premium. Share premium. And that amounted to, from the same changes in equity, we have 202,000. 202,000. After share premium, we have retained earnings. Retained earnings. So, and that is totaled 665,535. 665,535. 665,535. Then we also have general reserve, and that is total 148,709. General reserve amounted to 148,709. Foreign exchange reserve, and that amounted to 47,108. 47,108. Then that's all. So the sum of all the equity. Okay, we also have revaluation reserve, and that amounted to 80,500. 80,500. So we now sum up all our equity components. So starting from our ordinary share, 790,000. 790,000 ordinary share plus share premium of 202,000 plus retained earnings of 665,535 plus general reserve of 148,709. That plus 47,108 plus 80,500. That is totaled 1,933,852. 852. That is the sum of all our equity components. The next item is non-current liabilities, which include deferred tax liability, deferred tax liability. Then we have note 8. The income tax expense for the year ended June 30, 2022 is estimated at 143,552, while the deferred tax payable for the same period amounted to 12,520,000. This is our deferred tax, 12,520,000. After deferred tax, then note 7. We are following the conclusion of winding up. Okay, note 7 does not have, it's not a liability. Note 7 here. We have the 3% redeemable loan note was issued on 1st of October 2021 under the terms that provided for a large premium on redemption in 2025. The terms were interpreted by the finance director to mean that the loan notes has effective interest rate of 6.5% per annum. This is a financial instrument in accordance with IAS 32. So now, let's have loan notes amortization schedule. So to do that, you have a column for date or year, then opening balance, then finance cost, then we have interest paid, and then the closing balance. So the current year is 2022. So how much is the loan note as provided in the trial balance. We are given 3% redeemable loan notes, 843,000. The opening balance, we have 843,000. Your finance cost will be calculated at the effective interest rate, while interest paid will be calculated at the coupon rate. But the interest rate has been given in the trial balance. We are given interest on loan notes, 14,763. That is the amount paid, 14,763. Then the finance cost will be calculated at the effective interest rate. And how much is that? The 3% redeemable loan notes was issued on October 1st, 2021. This is the coupon rate. The coupon rate. So since interest paid has been given in the question, so this 3% will not be useful here. Then, under the terms that provided for a large premium on redemption in 2025, these terms were interpreted by the finance director to mean that the loan notes have effective interest rate of 6.5% per annum. Since it was issued on October 1st, 2021, and the accounting year end is June 30, 2022. Now, let's count from October 1st, 2021 to June 30, 2022. How many months is that? October, November, December, January, February, March, April, May, June, 9 months. So that means interest of 9 months will be calculated. We are going to calculate the interest on loan notes for a period of 9 months, 6.5%. So we have effective interest. This amount have been shown as finance cost in our statement of profit or loss, 6.5% times 843,000 times 9 months out of 12 months. So that gives us so we have 41,096. So this amount has been shown as an expense in statement of profit or loss. 41,096. So we subtract the interest paid. How much will be the closing balance? So 843,000 plus 41,096 minus 14,763. So we have 869,333. So we have redeemable loan notes. Redeemable loan notes that amounted to 869,333. 869,333. Our non-current liability is totaled 869,333 plus 12,520. That is 881,853. The next item is our current liabilities. Current liabilities. What are the current liability components? So we go back to trial balance. Then from our trial balance, so we have trade payables. Trade payables are 353,846. Trade payables 353,846. Note 8. The income tax expense for the year ended June 30, 2022 is estimated at 143,552. While the deferred tax payable for the same period amounted to 12,520,000. This is the income tax expense. We are going to pick this figure. Then you were told there was an over provision of 25,664,000 in respect of income tax for the previous year. You are going to subtract this over provision from it. Now, income tax provisions. So we are going to show this as working. The amount expense in our profit or loss, that is 143,552. 143,552 minus over provision of 25,664. So that will give you the amount you are going to charge as liability. 143,552 minus 25,664. Then you have 117,888. 117,888. Back to the trial balance. We have bank balances. At the debit side, we have 142,310. This represents cash at bank, and it has been recorded as current assets. Then at the credit side, we have 49,950. This represents bank overdraft. Now let's have bank overdraft. Bank overdraft, 49,950. 49,950. Now, let's sum up our current assets. Current liability. You have 353,846, 353,846 plus 117,888 plus 49,950. The current liability is total 521,684. Now let's add the current liability and the non-current liability to get the total liabilities. Total liabilities. This is total current liabilities. The total liabilities is the sum of the non-current liabilities and the current liabilities. The current liability is totaled 521,684, while the non-current liability is totaled 881,853 plus 881,853. Our liability is totaled 537. This is the total liability. By total liabilities, we mean the non-current liabilities plus the current liabilities. Now, let's have total equity and liabilities. Total equity and liabilities. We add the total liabilities to total equity. Our equity is totaled 1,933,852 plus 1,933,852. The sum of the equity and liability is total 3,337,389. 3,337,389. That is total equity and liability. If you compare this total equity and liability with the total asset, this is our total asset. You discover that we have the same amount, 3,337,389. Our total assets agree with the total equity and liabilities. This marks the end of the solution to this question. Thanks for watching ACCA. Please share the video with others.